Konnichiwa, bonjour, shalom. This is guest host Andrew Horowitz from the Disciplined Investor Podcast. And today on Money Girl, voy a hablar de international investing. Did you know that the key to investing is a diversified portfolio? You want a mix of stocks and bonds, property, and foreign currency to be able to make it through the rough market unfazed. Did you know that international investing is the key to many people's investment wealth? Some financial advisors may become wary when you bring it up, but international investing is very important to the disciplined investor. Sure, there are risks, but there are risks in a domestic market as well. It's just a matter of doing the research and understanding the possibilities of the downside, then weighing those risks against your investment needs. Sound familiar? It does to Kimberly from Santa Monica, who writes in and wants to know more about the pros and cons of international investing. Kim, I want you to remember this. International investing is really about perspective. Investing in European stocks is only international investing if you're not European. Have you ever thought that investing in the stocks of the Dow Jones as international and foreign? Well, it is for those investors in Argentina. Here's why international investments are so important. Over the past 30 years, annual returns for the index that tracks the major international stock markets has done better than our market 16 out of 30 years. Emerging markets typically have double or triple digit returns, and maybe more important is the fact that the US dollar has dropped in value against almost every major currency over the past 5 years. This means that earnings in foreign currencies are worth more for those US dollar-based investors when they withdraw their funds. Also, the range of industries available for investment adds to your diversification than simply investing in what is currently available in the United States. So if you like investing in alternative industries and diversifying your risk, investing internationally might be for you. Let's start with this tip. I suggest that most investors look to mutual funds when investing abroad. This is because there are a variety of different mutual funds that encompass basically everything most investors should need. There are funds that specialize in stocks, those that specialize in bonds, one for bonds and stocks, and still others for money market funds. Amongst these mutual funds, there are geographic breakdowns for what different companies will handle and control. There are global funds that look for smart investing opportunities worldwide, but often end up putting a good deal of their investments right back into the U.S. market. International funds, of course, only invest in foreign markets. Emerging markets, like Latin America and Eastern Europe, can offer a promising return but are volatile. Regional funds target specific areas such as Asia or the European Peninsula. Lastly, there are country funds which do exactly what they sound like, focus on specific countries for investment. Just like domestic markets, foreign investments are at risk when market values decline, interest rates change, or a creditor defaults. However, there are other things you need to be aware of before investing with this strategy. There is often a currency risk. This is when the value of the dollar changes in comparison to the foreign currency and can effectively erase all of your gains. A few mutual funds will try to protect this by neutralizing any loss due to currency exchange risk, but that also means they may call it wrong. The political, social, and economic risks in foreign countries are also a concern because foreign governments have been known to impose high taxes on international withdrawals and seize corporations for government property. Also, most foreign countries don't have the same regulations that the U.S. does regarding transparency, so obtaining pertinent information can often be difficult. Despite the risks, adding international investments to your portfolio can help to increase your diversification and potentially your gain while only adding incremental risk. Of course, read all of the materials carefully and only invest if you know what you're getting yourself into. Cha-ching! And that's all for now. Thanks for tuning in to The Money Girl. This is Andrew Horowitz sitting in for The Money Girl. I invite you to listen to my weekly podcast, The Disciplined Investor, a top 10 U.S. News and World Report investment podcast. It's available for free, so what are you waiting for? Download it today and start on the road to becoming a disciplined investor. Available on iTunes and the Zune Marketplace. And for sending in a question that helped with today's episode, Kimberly is going to get a copy of An American Hedge Fund, How I Made $2 Million as a Stock Operator, written by my friend Timothy Sykes. And don't forget, there's more information in the transcript of the show notes on qdnow.com. As always, everyone's situation is different, so be sure to contact a tax or financial advisor before making important financial decisions. This podcast is for educational purposes only and is not intended to be the substitute for seeking personalized professional advice. Thanks for listening.